Dear students, in the previous session we have studied about the meaning of not-for-profit organization, its characteristics, and how to treat the items into capital as well as revenue. In this session we shall see what are the financial statements that are prepared by a not-for-profit organization. A not-for-profit organization, it maintains three important documents. It is mandatory also. They prepare receipts and payments account, they prepare income and expenditure account, and they prepare balance sheet. Let's understand the meaning of receipts and payments account as well as income and expenditure account. Receipts and payments account, it is prepared by a not-for-profit organization. It is the summary of cash receipts. Cash receipts means including bank. It is a summary of cash receipts and payments during an accounting period. In an accounting period, what are all the cash receipts we have, we record them in the receipts and payments account on the receipt side, and what are all the cash payments we have, we are recording them in the payment side of receipts and payments account. So the meaning is quite simple. It is a summary of cash receipts and cash payments during an accounting period prepared by a not-for-profit organization. Then what are the features of these receipts and payments account? The first feature is it is a real account. It is a real account. As we are preparing cash account, the same way we are preparing receipts and payments account also. That's why it is a real account, and it is similar to cash book. It is similar to cash book. In the cash book we are preparing or we are recording all the cash receipts and all the cash payments. Then what is the difference between cash book and receipts and payments account? In the cash book we are recording the transaction in the chronological order. Whenever there is a transaction, we record them in the cash book. For example, when you pay the salary in the month of April, we record them, and when we pay the salary in the month of May, we are recording June, July, August, September, like that. We record them separately in the cash book. But in receipts and payments account, we are recording the summary of that under one head, salary. By salary, we are writing on the payment side. So this is the basic difference between receipts and payments account and the cash book. And it is the summary of all cash receipts and cash payments. It is a summary of cash receipts, of course, including bank also. It is a summary of cash receipts as well as cash payments, and it is prepared with the cash system of accounting. Cash system is followed, and it does not include any outstanding item. Whatever we receive, we are writing them. Outstanding items are not recorded in receipts and payments account. And the non-cash items like depreciation, bad debts, these items are not recorded in receipts and payments account. And one more feature is it begins with opening balance and ends with closing balance. So these are the features of receipts and payments account. So we are preparing one more account called income and expenditure account. What is the meaning of income and expenditure account? Income and expenditure account is an account prepared at the end of accounting period, matching revenue receipts with revenue expenses. The revenue expenses and the revenue receipts are compared or they are matched, and whatever the result we get, they are not called as profit or loss, they are called as surplus or deficit. So income and expenditure account is an account prepared at the end of accounting period, matching revenue receipts or income with revenue expenses to determine surplus or deficit. What is the meaning of surplus? See, in the trading organization, while preparing profit and loss account, we compare the expenses with income and the result is called net profit. So, not-for-profit organization, it is established with the objective of rendering services. There is no question of profit. That's why the difference is called surplus and not as profit. And the difference, if it is a negative balance, then it is called deficit and it is not called as loss. So, this account is prepared to determine surplus or deficit. So, what are the features of income and expenditure account? See, as the name itself says, income and expenditure. That's why it is nominal account. Income and expenditure account, it is a nominal account. It is similar to profit and loss account. It is similar to profit and loss account, and it is a summary of incomes and expenses. It is a summary of incomes and expenses, and it includes revenue items only. It includes revenue items only. Capital items are not recorded in income and expenditure account. They are recorded in the balance sheet. And the non-cash items like depreciation or bad debts, they may be entered. That is the fifth feature of income and expenditure account. And it does not begin with any balance. There is no opening balance, there is no closing balance. So, these are the features of income and expenditure account. And the third important document which is prepared by a not-for-profit organization is balance sheet. So, what is the meaning of balance sheet? You have prepared it in the first year PU. A balance sheet is the statement showing the assets and liabilities of an organization. Here also we are preparing in the same way, but the only difference is in the trading account, while preparing balance sheet, the difference between assets and liabilities was considered as capital, but here in not-for-profit organization, while preparing balance sheet, we must be cautious. The difference between assets and liabilities, they are called capital fund. So, these three important statements are prepared by a not-for-profit organization. Now, let's see what are the difference between receipts and payments account and income and expenditure account. As I have explained, receipts and payments account, it is a real account, and income and expenditure account, it is the nominal account. That is the first difference. And the second difference is it is similar to cash book, and income and expenditure account, it is similar to profit and loss account. And the third important difference is it is a summary of all cash receipts and cash payments. So, it is a summary of cash receipts and cash payments, but income and expenditure account, it is a summary of incomes and expenses. Incomes and expenses. So, it is the summary of cash receipts and cash payments. So, fourth important difference is it is prepared on the cash system of accounting. While preparing receipts and payments account, we follow cash system, but income and expenditure account is prepared on the accrual system. And the fifth important difference is receipts and payments account, it includes both revenue as well as capital items. Both the items are recorded in receipts and payments account, but in income and expenditure account, only revenue items are recorded. Capital items are not recorded, they are recorded in the balance sheet. And The sixth important difference is recent payments account, it does not include outstanding items. It does not include outstanding items, but income and expenditure account, it includes outstanding items. And the next difference is recent payments account, it does not include non-cash items. Non-cash item is like depreciation. We are not recording them in the recent payments account. In income and expenditure account, we are recording non-cash items like depreciation. And perhaps the last important difference is recent payments account, it begins with opening balance and ends with closing balance. But income and expenditure account, it does not have any opening balance and it does not have any closing balance. Okay, now let's see what are the unique terms which appear in the documents of not-for-profit organization. See, normally we come across the terms called entrance fees or admission fee, life membership fees, special receipts, donations, legacies, grant, subscription, honorarium. So these words are normally recorded in the books of accounts of recent payments account. So before we go to the problem, let's understand what is the meaning of this. Entrance fees. What is the entrance fees? Entrance fees or admission fees are the fees which are received by a not-for-profit organization from its members. So it may, a not-for-profit organization, it may receive the membership fees on monthly basis or annual basis, or there may be life membership fees also. So any admission fees received, normally they are considered as revenue receipts. So they are recorded on the debit side of recent payments account as two entrance fees. They are recurring in nature, that's why they are considered as revenue receipts. So all the revenue receipts are entered in income and expenditure account, so we have to write them on the credit side as by entrance fees or admission fees. So here we have to note one more point is the items which appear on the debit side of recent payments account, they go to the credit side of income and expenditure account, and the item which appear on the credit side of recent payments account, they come to the debit side of income and expenditure account. This point you have to bear in mind while working out the problem. And the second important term used by a not-for-profit organization is life membership fee. What is a life membership fee? Life membership fee is the fee received by a not-for-profit organization from its members in one lump sum. Instead of paying the membership fee annually or every year, a member he can pay the entire amount in one lump sum. That is called life membership fees. It is not recurring in nature, that's why we have to consider them as capital item. So in the recent payments account, we record both capital and revenue item. So life membership fees, it is a receipt, it is recorded on the receipt side. So do we need to write them in the income and expenditure account? No, because it is capital in nature, that's why it is not recorded in income and expenditure account, it is recorded in balance sheet. And the third important item or term used in not-for-profit organization financial statement is special receipts. Special receipts are the receipts received for a special purpose. Like the members, they may contribute for annual dinner, and any contribution received in such form, they are recorded in a separate account called receipts for annual dinner account. So whenever there are such receipts, they are recorded as special receipts, and they are revenue in nature, that's why they have to be entered in the income and expenditure account also. So the item which appear on the debit side, it comes to the credit side of income and expenditure account. And the next term used is donations. Donations means it is the amount contributed by the public to a not-for-profit organization to do the charity work. Here the donor, he may put some condition as to the donation should be used for a particular purpose only. When the condition is given or the purpose for which the donation should be utilized is mentioned by the donor, then such donations are called specific donations or special donations. When the purpose is not mentioned by the donor, the condition is not put by the donor, then the not-for-profit organization, it can utilize such donations for any welfare activity, and such donations are called general donations. So while treating them, the general donations are revenue in nature. We may get such donation very often, that's why they are revenue in nature. We write them on the receipt side of recent payments account. Whether it is general donation or specific donations, we have to write them on the receipt side of recent payments account, but while recording them in the income and expenditure account, only general donation should be recorded. Then where should we write the special donations? Special donation should be recorded in the balance sheet because they are capital items. They should not be used for any purpose. That's why they must be recorded in the balance sheet. So out of donations, general donation should be recorded in income and expenditure account, and special donations, they must be recorded in the balance sheet. However, when the problem states that 50% of the donation is capitalized, then you have to capitalize 50%, only 50% should be entered in the income and expenditure account. When the condition is given in the examination, then you have to follow the condition given in the question paper. Okay, now let's see the legacies. Legacies are the gifts received by a not-for-profit organization as per the will of a donor. When a person, he prepares a will stating that after his death, his property or his deposit should go to a not-for-profit organization, and any gifts or donations or deposits or property received by such means, they are called as legacies. Then whether they are revenue in nature or capital in nature, they are capital in nature. We do not get such legacies very often. That's why they are capital in nature. They should be entered in the balance sheet. But in the recent payments account, you have to write them as legacies on the receipt side. And you have to write them in the balance sheet also. Then what is the difference between donations and legacies? When a person comes and gives you the donation, then it is called donation. When you receive such donation after the death of a person, then they are called legacies. Okay, now let's see the grant. What is the meaning of grant? By looking at the charity activity of not-for-profit organization, the government may give you the grants, and such grants are not recurring in nature, so we are writing them in the recent payments account, and the same amount is written in the balance sheet and not in the income and expenditure account because they are capital in nature. Then comes subscription. Subscription is the amount received by a not-for-profit organization from its members to do the charity work. So subscription, they are recurring in nature. Again and again we are getting the subscription from the members. So it is revenue in nature. They have to be entered in the receipt side of recent payments account, and they must be entered on the credit side of income and expenditure account. Honorarium. What is the meaning of honorarium? The work of not-for-profit organization is managed by some of the staff, and normally they are not paid the salaries. They are doing the volunteering work, they are doing the voluntary work. That's why they must be paid some money, and that amount is called honorarium. And in a hospital, a well-known doctor, on charity purpose, he may come and give the treatment, and when you pay some amount to that person as a token of your gratitude, then such amount can also be considered as honorarium. So it is not the remuneration, it is the amount given for the service, voluntary service, to maintain the expenses, and they are recorded on the credit side of income and expenditure account, and on the in the recent payments account they are recorded on the debit side under receipts. These are the unique items which appear only in not-for-profit organizations' financial statements. Now let's see how to treat the items of subscription when there is outstanding, when there is advance or prepaid, and the treatment of stock, opening stock as well as closing stock. See, you have studied in your sole trading concern while preparing final accounts, you have prepared trading and profit and loss account and the balance sheet. While preparing profit and loss account, you have seen a lot of adjustments, maybe for payment of manager's salary or debtors, provision for debtors. So all complex adjustments were there. But while preparing income and expenditure account, you need not worry about all those complicated adjustments. Here only a few adjustments are given, maybe relating to outstanding and advance items, maybe relating to consumable stock, opening stock, closing stock, or it may be relating to some depreciation. Only these three major adjustments were given. The variety is less, but the number of adjustments may be more. The outstanding of previous year, outstanding of current year, advance of this year, advance of next year. So like this, the number may be more, but normally there will be less variety of adjustments in income and expenditure account. See, every time we prepare a final account of sole trading concern or any other form of organization, there will be trial balance. From the trial balance, we write them in trading account, profit and loss account, and even the balance sheet. But in not-for-profit organization, we do not have any trial balance. In the examination, the trial balance will not be given. You will be given with the recent payments account. As you know, the recent payments account, it involves only the transactions of a particular year or accounting period. In an accounting period, what are all the cash and bank receipts? What are all the cash and bank receipts? They are entered on the debit side, and what are all the cash and bank payments? They will be entered on the credit side. The purchase of asset, they were entered on the credit side, and whatever the balance you have, it will be balance carried down. So cash balance is known. Any other information, it may not be available. Now let's see an example where I'll prepare recent payments account of a new firm where we are writing the receipts on the left hand side and the payment on the credit side. Let us assume that this recent payments account is for the year 2018, for the year ending 31st March 2018. So when you start a new not-for-profit organization, the members, they may give you the entrance fees. So I'll take entrance fee as some 50,000 rupees. We may get donation from the public. Two donations, the amount may be another 1 lakh. Definitely there will be a subscription the subscription amount will be another 50,000. Let's take for example. So we have the total resource of, we have entrance fees, donations, subscriptions, all these are receipts, and with this much fund in our hand, we have to do the charity work. To do the charity work, we need some land and building, some office is necessary. For that purpose, in the beginning, you may purchase a land. Maybe at a concessional rate for a charity purpose, people may give you the land at concessional rate, and in that land you are constructing a building. So the cost of land and building may be 1 lakh rupees, let's assume, and you are purchasing the furniture again for some 25,000 rupees. Now office is there, land and building and furniture, everything is ready. Now you start doing the charity work. The total amount of charity work done by this organization is 70,000 rupees. What is the total amount of resources left in our hand? The total here is 2 lakh. Here the total is 2 lakh, and the difference is, this will come to around 1 lakh 95. So 5,000 is the difference. 5,000 by balance carried down. So this is the recent payment account of 2018. Now we'll go to the next year. Recent payment account of 2019. Again, the same headings will be there. Whatever the balance carried down you have in the previous year, it is the closing balance of cash. It will come to the debit side as to balance brought down 5,000 rupees. And in the year 2019 also, you are getting some donations, there will be subscription. Let's assume that there are subscriptions of rupees 50,000, and there will be a donation of $70,000. So total resources we have in the receipts, and along with the opening balance, the total fund you have, the total resources you have is 1,25,000. So whatever you received in the year 2019 in the form of subscription and donations, you are purchasing a motor vehicle, maybe for 50,000, a second-hand motor vehicle, and for the purpose of recording the transaction, you may purchase some computer also. The cost of computer may be around 25,000, and with the rest of the amount, you may do the charity work. And for the charity, you may spend around 35,000 rupees. So what is the amount left out? That will be balance carried down. So on the debit side, it will be 125. Here it is 1,10,000. 15,000 is by balance carried down. Since it is a newly started firm, you know that in the first year you have purchased land and building, and you have purchased furniture, and in the second year you have purchased motor vehicle, and you have purchased computer. So these informations are available, but in the textbook or in the examination, you may not get the recent payment account of 2 or 3 years. You are preparing the recent payment account for one particular accounting period only. So this statement will not be given in the examination. So what the information you have? You have the recent payments account where the assets are motor vehicle and computer. So now tell me, how many assets we have in our hand? Only motor vehicle and computer? No, there are assets, but in the recent payment account of 2019 it is not shown. It is shown in the earlier recent payments account. So for this purpose, while preparing income and expenditure account and balance sheet, we need the informations of previous years also. The assets, whatever the assets we have purchased in the previous years, we must have those informations, and whatever the funds we have in the earlier years, we must have that information also. That's why for every recent payments account, there will be additional informations and adjustments. Okay, now let's see how to incorporate the treatment of outstanding or advance items in income and expenditure account. So in the beginning, let's consider any income. We shall consider the amount given as receipt. So how it is treated in income and expenditure account and how it is treated in balance sheet. See, in a particular year, when you look at the recent payments account, you will find an item called subscription. As you know, subscription is the amount received from a member every year. So it is recurring in nature, it's entered in recent payments account. So when an amount of subscription is received, it is entered in recent payments account from the cash book, and you have to write them in the income and expenditure account on the credit side. So this is the item given in the recent payments account. So you are not writing them in the balance sheet. It's only the revenue receipts. Then what are all the normal adjustments which appear in the question? The normal adjustment is outstanding at the end of current year and outstanding subscription at the end of last year. So regarding outstanding, there will be outstanding of current year and there will be outstanding of previous year or last year. And there will be adjustments of advances or prepaid. So advance subscription at the end of current year, there will be advance subscription at the end of last year. You get this information normally from the adjustments. It is the adjustment relating to subscription only one variety, but there will be some 3 or 4 adjustment outstanding of last year, current year, like this. So let's consider the first one. Outstanding at the end of current year, whether it should be added or subtracted from the subscription, because last subscription must be deducted, as we know. But what is the logic behind that? How to understand it? Let's understand it with a small chart. This is the year 2019 and let's call it as current year. This is the previous year or last year, I call it as 2018, and this is the next year 2020. So whatever the outstanding you have relating to the previous year, I'll write it or I'll consider it as the outstanding item at the end of the year. See, this is 2018. So at the end of 2018, what is the outstanding that is related to 2018? And any outstanding of current year, we decide the outstanding at the end of the period. So any outstanding at the end of the period, I'll write it at the end of 2019. So what is the next year? 2020 is the next year. Okay. Now let's see the advances. What are the advances at the end of previous year or last year? I'll write it at the end, advances. And what are the advances for the current year? I'll write it at the end. Now let's see the nature. When there is an outstanding of last year, whether it is related to last year or next year, say for example, you are supposed to receive a subscription of 50,000. You have received 45,000. 5,000 is outstanding or unpaid. Whether it is relating to previous year, unpaid during 2018 or 19. It is unpaid in the year 2018. So, the outstanding at the end of the year, while writing or while calculating the amount or while analyzing the amount, it relates to the previous year. The outstanding of current year, the outstanding at the end of current year, it is relating to the year 2019 only. It is not related to next year, because in this particular year, some of the members, they might not have paid the subscription amount. So it is relating to current year. Okay. Now, advances. You are giving the advances in a particular year for next year or previous year. Advance should be always given to the future years, not to the past years. So when you give the advance, it will be used in the next year. So always advances will have a forward look. And advance at the end of current year, it cannot be used in the year 2019. It can be used in the future years or coming years. That's why it has the forward nature. Say, outstanding has backward nature and advances, they have forward nature. So with this point in our mind, we should analyze outstanding of last year is included in this year, whether you should add or subtract. See, whatever you have in this 2019 or current year, you add it. Whatever you have in the next year, you deduct. It does not belong to current year. Whatever you have in the previous year, you deduct, because it is nothing to do with the current year. Only the transactions or outstanding or advances relating to current year only we are considering. Now, outstanding of previous year, it is minus. Outstanding of current year, it is plus. So now let's look at the chart. Outstanding at the end of current year. Outstanding at the end of current year 2019, what you have to do? You have to add. So this will be plus in income and expenditure account. You have to write by subscription while preparing income and expenditure account. While preparing income and expenditure account, you write by subscription plus outstanding of current year. So like this you have to write. Now let's look at the outstanding of last year. The outstanding of last year is added or subtracted? It is subtracted. So minus. Outstanding at the end of last year, it is minus. So the treatment of outstanding items are over. Now let's see the nature of advance items. Advances at the end of current year. The advances at the end of current year, whether they should be added or deducted, it has the forward nature. That's why it will come in the year 2020. So this amount has to be subtracted. And now look at advances at the end of last year. Last year's advance, it is utilized in the current year. Any advances relating to the last year or any advances of last year to the current year, they must be added because it relates to the current year. Any items relating to the current year, it must be added. So with this understanding, we have to record the outstanding and advances items in income and expenditure account. Now we have given only the half effect because we have selected the items from the adjustment and all the adjustments has to be entered twice. They have double effect, so you have to enter them in balance sheet also. Now let's see whether we have to write these items on the asset side or liability side. Any outstanding at the end of last year or any outstanding, whether it's related to last year or current year, it is the amount to be received in future or to be paid in future. If this amount is considered as an obligation, consider it as liability. In future, if these amounts are supposed to be received, then consider them as asset. So any outstanding income, outstanding subscription, some of the members might not have paid the subscription amount. So in the next year, you are going to receive them. That's why it must be considered as asset, whether it is relating to previous year or current year. Now look at the advances. When the advances are paid, you are not using that amount in the year in which you have received the amount. You are utilizing it in the next year. So it is your responsibility to keep that amount in your books and you have to spend that in the coming year. So it's your liability. So write them in the liability side. So whether we should enter them in the opening balance sheet or closing balance sheet. Here comes the timing effect. If it is at the end of current year, write them in the current year's balance sheet. If it is at the end of last year, enter them in the last year's balance sheet. Here also, advances, if it is for the current year, write them in the current year balance sheet. If it is at the end of last year, enter them in the last year's balance sheet. So this is the brief idea as to how to treat the outstanding subscriptions or advance subscription while working out the problems from not-for-profit organizations. Now let's see how to do the adjustments relating to expenses. There won't be any change while recording the expenses, but only the nature changes. Here instead of income we have written expenses. So here also in the balance sheet the nature changes. Instead of writing assets, you may have to record it as liability. Let's see them one by one. See, outstanding of last year, outstanding of current year, advance of current year, advance of last year, and advance at the end of advance of last year and advance at the current year. So we have discussed about the incomes. Now let's see how to treat the expenses in income and expenditure account and the balance sheet. So instead of income I have written expenses, but there won't be any changes in income and expenditure account. There will be changes in the balance sheet only because the nature of item will change. See, instead of expense we have written, instead of income you have written expenses. In the same way, in the balance sheet, instead of asset you may have to write liability, instead of liability you may have to write asset. Let's see how the effect is made. See, the outstanding of last year or outstanding in the beginning of the year, outstanding at the end of the year, advances at the end of last year, advances at the end of current year. How to treat them? The nature will not change. Now let's analyze the expense like salary. Any outstanding of 2018 or outstanding at the end of the year, it is relating to the previous year, so minus. Any outstanding in the current year, it is relating to the current year only or to the year 2019, so this amount has to be added. So advances of last year, the advances are given for the coming years, not to the previous year. That's why the advances of last year, advances found at the end of last year, it is for the current year, that's why it must be added. So any advances received or any advances shown at the end of current year, it is relating to the next year, it has the forward nature, so you have to deduct it. Now let's look at the treatment. Outstanding at the end of last year. Outstanding at the end of last year, it has to be deducted, so I have written minus. So outstanding during the year or in the year 2019 or in the current year, it has to be added. Advances of last year or advances found at the end of last year, that is relating to the next year, that's why you have to add. And any advances found at the end of current year, it is not related to that year in which it is received, it is relating to the next year, that's why it has to be subtracted. So this is minus. Now let's look at the treatment of these expenses in the balance sheet. Outstanding items. All the outstanding items, they have to be entered on the liability side of balance sheet. What is the logic behind this? Outstanding expenses, for example salary. You are supposed to pay the salary for the entire year. Say for example 12,000. But you have paid only 11,000 rupees, 11 months salary is paid. 1,000 salary is unpaid or outstanding. Is it not the responsibility of the organization to pay this amount? Is it not the liability of this organization to pay this amount? Yes, it is the liability. So any outstanding expenses, they must be considered as liability. Now look at the advances. The advances are the amounts given for next years. So whenever you pay the expenses in advance, in the coming years you need not pay that amount. To that extent your responsibility will be reduced. So these advances must be considered as asset. In simple words, for the incomes, the outstandings are assets and advances are liability. And for expenses, the outstandings are liability and advances are assets. So with this basic knowledge, you have to work out the problems on not-for-profit organization.